We are beginning the second half of April. Mark Oppold in for Scott Shelley here, and Scott back here tomorrow, all things equal. But if not, still be here the rest of the week helping out here. Glad to do it. Rural America Live tonight. Suzanne will have some details on that. They work through this market day report. Our friends from Mother Ben's joining us tonight. But right now, our focus is on the grain and livestock trade. Oliver Slope joining us to help us do that. Oliver, overnight lower in this grain trade, and we are lower this morning. We'll get the numbers updated here in a minute, but just generally your thoughts here on this lower trade to start the second half of April.
Yeah, well, we had a nice little rally and pop on Friday's trade, and I think Friday, just looking at the markets broadly speaking, it was a risk-off day with a lot of uncertainty on what was going to transpire in the Middle East over the weekend. And a risk-off trade for the grains means short covering. Obviously, the funds have been pretty darn short, corn, soybeans, and wheat for some time. So a risk-off trade would be covering those shorts. We saw the rally on Friday. Nothing really major took place. I guess the worst case scenario didn't take place over the weekend. So now you're just kind of seeing the market get back some of that premium. And you're seeing it in the outside markets as well. Oil was selling off. The stock market was rallying back. Cattle was rallying back. We'll cover that in the next segment. But I think a lot of this is just kind of resetting from the premium that was kind of put into some of these markets ahead of the weekend.
All right, so we are May down 4 1/4 at 4.31 1/4. New crop December down 4 cents, 4.68. Let's move over to the soybean trade. They've been down double digits since the open, continuing lower. May down 12 3/4, 11.61 1/4, and that November new crop down 9 3/4. Been as low as 11.62 1/4. Now 11.66 1/2. Same scenario in soybeans that you're talking about, corn, just kind of taking it back with what we put on it?
Yeah, we're trading back to levels not seen since Friday morning. So not a whole lot has changed. Just a little bit of whipsaw. Now 11.50 for that new crop November contract. I think that's going to be a very crucial point for the market and the bulls to defend. That was a previous breakout point from March 8th. So if we can't defend that, we break and close below there, you could start to see the selling start to ramp back up. Looking at the commitment to traders report, funds have been pretty well flat over the last 3 weeks. Net short about 139,000 futures and options contracts, and broken down, that's about 54,000 longs and about 193,000 shorts. So we're just kind of treading water here as the market looks for new news. And right now, for those new crop contracts, there's really not enough concern to rally the grain markets, but also not enough certainty to really sell it off.
Yeah, very good. All right. Looking at the wheat futures, then you're down there as well. 6 3/4 lower on that May contract, 5.49 1/4. Those of you on rural radio. And July new crop down 5 3/4, 5.65. That's about a nickel off of its low of the day so far. Moving over to Kansas City, the May contract down 6, 5.83 3/4. July down 6 1/4, 5.80 3/4. But that's a nickel off of the low there. Might get your thoughts on that, Oliver. And then finally, Minneapolis wheat down a nickel. The May down 5 cents, 6.37 3/4, and July down a nickel at 6.45. Wheat more of a follower here today, or no?
Yeah, it really has been, and especially in today's trade. We're looking at the Chicago July contract pretty closely. That's where a lot of the volume is being traded at. And that 550 to 555 has been what we've defined as a pivot pocket. I think we need to defend that. We've been making a series of higher highs and higher lows over the last couple of weeks, but a break and close below 550 would neutralize some of the bullish technical patterns that we've seen developing over the last couple of weeks. So it's going to be a big week ahead for these grain markets and the outside markets as the money flow continues. I'm sure there's still going to be some headline risk ahead of us this week as well with regards to if Israel is going to retaliate on Iran now. So there's going to be some volatility, so managing risk accordingly is paramount.
And looking at that, you mentioned the outside. Let's take a look at crude oil down at only 57 cents. I say only. Get your thoughts on that real quick before break. Right at near the $85 a barrel level. A lot of folks were talking $87, $88, $90 was not going to be a problem in crude oil. Your thoughts?
Yeah, only down 50 cents or so, but $1 off of the low in just about the last 15, 20 minutes, as there has been some headlines within the last half hour that Israel could, retaliate on Iran as soon as today. So you're starting to see some of that war premium come back into the market, the jockeying back and forth. Just getting started for the week.
Just getting started. Well, we are halfway through what we wanted to get done here, the grain trade. Have you back and look at livestock here and see about a big rebound. And are we continuing? Oliver Slope, Blue Line Futures, joining us when we come back. Oliver Slope, Blue Line Futures, joining us every Monday, and so let's put him to work and keep him to working here in the livestock trade. It's always fun, more fun, I guess, more enjoyable for those producers out there, especially people are trading this, but producers looking for higher money, and live cattle futures, they're certainly, and feeder cattle, seeing it here this morning. Looking at live cattle right now, they were up over $3, and June still is $3 advance plus, 174.65. April, still got to look at that. Up $1.80 at 180.70. And then we'll look at feeder cattle here before we get your thoughts on this increase this morning here, Oliver. April feeders up over $2.50, 240.12, and the May contract up over $4, 238.25. All right. You talked about this, I think, late week, that we would see a rebound or possibly rebound the cattle and feeder cattle, and so it is here to start the week.
Well, it's kind of the same type of mentality that we touched on in the grain markets. Into the weekend, you have a risk-off trade, and so you saw a lot of long liquidation in some of these markets where funds had a healthy net long position. Nothing, again, really transpired in a big way over the weekend overseas, and no major headlines regarding the avian flu either over the weekend. So you're starting to see the market recover, which I think is nice to see. I am incredibly pleased to see the cash market for live cattle hang in as well as it has over the last couple of weeks with the sell-off that we've seen in futures. I think Friday's 5-area average was just north of 183, which is pretty darn good considering the sell-off in futures. So I do think if the world doesn't fall apart and we can kind of avoid some of these headline risks, I think we could continue to see these front-month live cattle futures continue to gain some ground back.
Very good. All right, about 30 seconds here looking at the live hog, lean hog complex here, and lean hogs a bit lower. The May down 47, June down 67. Over to you here, June 101.40 and the hog trade.
Yeah, the hog trade just got very overextended. I think funds are net long about 92,000 contracts, which is just a stone's throw away from the record net long position set back in 2013, which was about 97,000 contracts. So you've started to see, again, some of that long liquidation on the back of headline risk and just an overbought market. I think 100 is going to be kind of the big line in the sand, psychologically speaking, that a lot of market participants, traders, are going to be keeping a very close eye on here this week.
Yeah, 100. It would seem to be a pretty easy number to look at, again, but you say psychologically only here. So, Oliver, thanks for your time as always. Have a great week.
Thank you. You too.
Oliver Slope, Blue Line Futures, coming to us from Chicago, and great to have him and all these folks.